Welcome to the Great Reset Opportunity Report. I'm Chris Blasi. I'm really pleased today to have a fixture in the world of economic analysis, and that is Chris Martenson. Many of you may know Chris as the co-founder of the Peak Prosperity website, peakprosperity.com. Chris is truly an economic researcher and a futurist, and he really specializes in energy and resources, their depletion, and what their effect is on the overall economy. He has also produced an educational video series called The Crash Course, and this kind of takes in all his analysis and his expertise on resource depletion and ties it and explains how it is affecting the global slowdown economically. Now, with that said, I'd like to welcome Chris to the show. Chris, welcome aboard.
Thanks, Chris. It's good to be here. We can be two Chris's agreeing with each other, I guess.
Yeah, that's a nice thing. As you probably know from the title of this series, The Great Reset Opportunity Report, we focus on what we believe and what we see are profound changes taking place economically, socially, politically around the world. And this is not to say that change isn't always happening. It is, of course. Nothing is static. But we see the magnitude of change at levels none of us have experienced in our lifetime. And I think a lot of we'll call wave theory analysts and who look at long-term trends will say that this coincides with these 100-year plus changes in the economy and the world. Now, with that said, we'd just like to get a level set with our guests to ask them, do you believe in this conversation and this belief and a great reset? If so, how would you describe it? And also, where on the timeline do you think it is?
Well, that's a great framing and a great question, and I'd be happy to respond to that because I've been on that same wavelength for a while. And my background, I have a PhD in a biological science, and so I'm a scientist at heart. I love data, and that biology background though really informs me though that we're humans and we're an organism. And like any organism, when we ran into a tasty source of energy, a food source, we grew into it, right? So everything that people think they understand about how things work, and all the wave analysts who say, well, if you look back 100 years, here's what we can expect. I have a different view, and it's one that people should understand and debate and reject if they want, but at least it has to be part of the conversation, and it's this. Fossil fuels were that tasty source of energy. They were the sugar to our yeast, right? And we're eating that stuff literally and figuratively, and we're coming through it. And we're through the age of easy oil. The days of drilling 1,000 feet down in the Saudi desert and getting something that will produce 4,000 barrels a day for 50 years. Those wells are gone. And we're down to the less obvious stuff, right? And as we make that transition, I think the past is going to be a very poor guide for the future. So one of my taglines is the next 20 years is going to be completely unlike the last 20 years. Now, we're halfway into that statement. I first threw that out in 2008. And so I think this next 10 years, we're going to see some really magnificent changes that are going to, yes, change always happens, as you said, but this is different. Here we're 7.8 billion people, headed to 9 or 10 billion. We're eating fossil fuels, and we have no plan B for how we're going to go past that, right? So that's going to create a lot of challenges. It's going to create a lot of opportunities. But this is a moment where, to really mix metaphors up, I think people need to see where the puck is going, and they're going to have to skate to where it's going to end up. Not where they think it is, but where it's going to end up, because this is going to be the largest set of changes that humanity's ever gone through. And we're in the early stages of that. We're seeing the political chaos around that. Oh, are we capitalists? Are we socialists? I think all the isms break in this story, and there aren't going to be any great models. And so because of that, we just have to understand really the big picture here. And that's why I put economy, energy, environment. You have to look at all three of these things together now. We have people running the economy as if you can just look at that one sphere. Just throw more credit in there, says the Federal Reserve. Maybe that will work. Well, it hasn't been working. For 15 years, we've had below trend growth. Well, I think too much debt explains that, but maybe oil that's now reliably $60 a barrel instead of 10, maybe that helps explain it. And where did all the insects go? And why are the coral reefs disappearing? And wait, what happened to all the things that were, the amphibians in the ponds when I grew up, right? So we're seeing this is the era we live in. It's extraordinary times. I think family fortunes are made and lost in this particular moment in time. And people need to understand that the game has changed in a really fundamental way.
Well, that you really outlined change. I think very few people, if you're accurate and correct, could even get their head around. I mean, I think the challenge with almost most people, analysts, it's always looking in the rearview mirror and extrapolating and saying this is the line we're on, and it's just going to be a repeat. We're just going to go through a business cycle, and we're going to come out. We're going to do the same thing, as you said. We're going to issue more debt, and we're going to buy more cars, and that's going to drive the economy. So it's quite exciting, and I think the big challenge is, as you said, fortunes can be made at times like this, and that's so true. So where do you see investors when you say go to where the puck is going? Where do you think investors should be focused on for not what's going to benefit and go up in the next 2-3 years, but where 5, 10, 15 years down the road? Where is a strategic investor? What should he be looking at?
Well, one of the models we use for looking at this comes out of this idea that we have to reclaim the word wealth, right? So Wall Street markets this idea that wealth is these fantasy digits that you hold in your portfolio, right? Look, I have this statement says I'm wealthy, right? And that's true for a period of time, that money is a reliable sort of surrogate for wealth, as long as there's a relationship, a balance between the claims. That's all money is. Money is not actual wealth. It's a claim on wealth, right? Money does me no good, does you no good if we can't exchange it for something. Do I care if I have a $100 piece of paper or a $1 piece of paper? If I can't buy anything with it, it's useless. So we always have to understand and remind ourselves that money and debt, they're just claims on what? Well, real stuff. Now, this is the real world. This is the food, the energy, the buildings, the real capital. So we always have to look at that. And guess what? Humans get these things out of balance from time to time. Sometimes we do the Zimbabwe, we do the Venezuela. The tendency is to print. It's very human. And we've been making outrageous claims against the future. Just since the 2007 crisis started, the world is now $100 trillion more in debt than it was when the crisis broke. Why? Because the central banks have said, well, let's just fuel this. Let's get more credit. Let's give people more money. And all they've done is ramp up a huge amount of claims. Now, what happened with the underlying real stuff? How did the economy grow under that? Barely at all in reference to this. And guess what? My prediction, I could be wrong, is the central banks are going to keep doing that. They're going to keep printing more money, cramming more credit, lowering interest rates, removing cash from the system so they can, saddle you with negative real interest rates in your bank accounts. Whatever they have to do, they're going to keep doing this, and it breaks. So where's the puck gone in the past when that's happened? We are going to be treated to this idea that at the retail level, for everybody who's not a bullion bank or a primary dealer or a member of the billionaire class, everybody else gets treated to this idea that your wealth is going to be destroyed, right? That's what they told the poor people of Weimar Germany. They said, oh, your wealth got destroyed. Sorry, but the wealth didn't get destroyed, because now we're going to reclaim this term. Real wealth is the stuff we can buy with our currency. This is primary wealth, which is land, rich stands of timber, rich fishing grounds, oil in the ground, coal seams, rich farmlands. And then secondary wealth is the means of production. It's the factories, it's the real estate, it's the things like that. So our view is, look, if the claims are going up and up and up, you don't want to have all of your wealth tied up over here in the claims. You might want to have it tied up at least in equal measure, if not largely, in the real wealth. So gold and silver, to me, represent real wealth because it takes real energy and real effort to take that stuff out of the ground. Guess what? Anything that takes real effort represents real wealth in some way, shape, or form. What value do people ascribe to it? We'll let that work itself out. But for me, I am putting more and more of my fantasy stuff, my currency wealth, into real land, real estate, hard assets, things like that, the means of production, because history says we're going to keep printing until it breaks. And when it does, there'll be this flood of all this stuff trying to squeeze through a portal that's not big enough for everybody. And, the only chance I have to compete against the billionaires is to move before they do. Because once they start to move, history also says that once the big wealth decides it needs to get out of the paper wealth into the real wealth, the doors are just tiny. They're insignificant. So that's how we're looking at it, is don't confuse wealth with money, currency. That's a marker. Understand that real wealth is primary and secondary wealth. Get out of this tertiary wealth and be over here before it becomes obvious you need to do that, right? So
yeah, and I would agree. I think because of impatience for what you would call the regular retail investor, right? The non big players. The best you can do is identify that a trend that's coming, that's going to have a powerful force, get positioned, and then wait to get taken and enjoy the benefits. Too many people, though, they get in, and after a short period of time, they get distracted, they get frustrated, they start looking at other things, and they keep changing gears, right? Instead of establishing that position and waiting. I mean, you think about real estate. Everyone's heard the stories of someone's grandfather that bought real estate, and then the family made a fortune because that area ended up, being heavily developed. But they forget to say he also sat on that land for probably 10, 20, sometimes 30 years. So, those big fortunes require being in the right asset, being in there early, and then waiting for your time to come. But I just want to back up a little bit, because when you talk about the profound change, and I agree that's coming, there's all the legacy, we'll call garbage. And the thing that's eviscerated the middle class in this country at the end of the day, all to me boils down to debt, whether they did it through student loans or houses or whatever. And I think most of us would agree this debt is unsustainable. But the institutions in place only have one play in their playbook. Just issue more, restructure it, issue more, issue more. Now, for this change to take place, I don't believe you can really drag that legacy debt with it, right? This change is talking about a real clean break to something new. So what do you see happening with all this legacy debt on corporations, governments, and individuals? Does it disappear? Is it wiped clean? What do you see happening?
Well, it's a great question. And this is easy to answer. Once you get past a certain level of debt, the only question to resolve is this one: who's going to eat the losses? That's it. We're literally at that point of the game right now, and we're trying to figure out who's going to eat the losses. And guess what? The big banks say not them. And 2008 showed that they have enough control over the legislative bodies and the banking structure to, heads they win, tails you lose, right? So they made massively stupid bets. Citibank did some really dumb things. So did Goldman Sachs. So did AIG. And they got paid 100 cents on the dollar for their mistakes, plus no clawbacks for all the earnings that they'd gotten when they were making these stupid risky bets and pulling all that in. Meanwhile, the people, got the taxpayers were asked to eat the losses. Now, they're going to try that again because there's massive losses coming. That's just the nature of the beast. And we're already seeing in the yellow vest protests in France, the Catalonia breakaway, the rise of populism in Italy, the election of Trump. These are all representatives of people coming forward saying, we're tired of this game. We're tired of being the many who have to give to the few. And this is a critique I have of all central banks. They are reverse Robin Hood organizations. They take from the many to give to the few. They wrap it up in some fancy talk, but the truth of the matter is that's all they do. They can't create wealth. Remember, wealth is real stuff. They print the claims. So they print the claims, hand them to the 0.1%, and then throw their hands up and say, wow, isn't this wealth gap terrible? No, it's a matter of policy, right? So sure. Everybody listening to this needs to understand there are policies in place that are going to attempt to take what you have. And these will come in the form of new taxes and levies and fees. And of course, we haven't even gotten to the biggest part of the story, which is not the debt, but the unfunded liabilities, whether that's an unfunded municipal, pension offering out of Cook, Illinois, or it's the, Social Security and Medicare pieces at the federal level. These unfunded liabilities are 4 times to 5 times larger than the debt itself. The only question to ask is who's going to eat the losses. And guess what? The Federal Reserve would love for everybody to eat the losses. And that means inflation and it means financial repression, which is you have to be earning less than the rate of inflation on your savings. If they can keep you in negative territory, that's how they harvest from you. And the only way to escape that is to not play that game. If you're locked in that game, sorry, you're just going to get thieved along with everybody. And it's, at some point, we the people are going to have to say, we're okay with this, or we're going to say we're not okay with this. And that really is informs a big part of how I think the future is going to unfold. There comes a time when people say we're not okay with this. We might do something less intelligent about it. We might, elect somebody who's promising that they're going to really change this in a new way, and we'll shift from capitalism to socialism or whatever. But the bottom line is, whoever we elect can't fix the underlying problem. There are debts and liabilities that no longer can be met out of current or anything we can imagine to be future production. So the question is, who's going to eat the losses? Central banks are going to try and cram it down our throats with an inflationary outcome. If they fail at that, though, here's what we get. We get a deflationary collapse that's going to be absolutely mind-blowing, that will put anything that we've seen in history to shame, I think.
Sure. So the facilitator of all this debt and this malinvestment and this, I think the root of most of these problems, right, is the Federal Reserve, central banks. And I think you've used the term and you've said that they're really just redistributive arms, and they're totally political organizations. All this theater about how they're apolitical is a farce in my mind. So it doesn't look like there's a place for a central bank in this change, at least the central banks as they exist now. I mean, unfortunately, they'll probably sell themselves and their idea and their concept to the politicians again in the future. But where do you see our current Federal Reserve, in this change? Do they disappear? Do they reinvent themselves? What should people expect?
Well, listen, I can actually make a pretty reasonable case that the original incarnation, all the way back in 1913, which said, hey, it's an Uber organization that is going to lend at punitive rates to high quality assets during very rare moments of crisis. I can understand and make a case for that. Now, mission creep, and we're up to the point where today, my view is that the central bank is day trading the stock market and the economy and attempting to be responsible for setting the prices for everything. I've also called the Federal Reserve basically a communist organization because, stop me if you've heard this one before, a small cabal of unelected officials attempt to set the prices for everything because they know best.
The most undemocratic structure there is.
And meanwhile, pay no attention to the fact that they and all of their closest cronies are in a revolving door of fortuitous outcomes, right? So, Ben Bernanke leaves the chairmanship and goes and joins Citadel in an advisory capacity. Citadel is a high-frequency trading or outfit that day trades 20% of the daily volume in the U.S. stock market. What does that mean when the chairman of the Federal Reserve joins the entity that's most capable of manipulating and controlling the stock market and all markets, not just the stock market, but this would include the gold market, the silver market, the futures market, the places where the highly leveraged things are traded. This company does that, and the chairman joins it. They're not even trying anymore, right? But here's the larger problem with all this, which you put your thumb on, which is when a small group decides that they know better than the majority, bad things happen, right? Trying to set the prices for everything is really a stupid idea. So they've tried to set the prices of money. Of course, they do that. That's the Federal Open Market Committee, Fed funds rate. Hey, we know the price of money that's best for everybody. And then they went beyond that and said, hey, we think we know the price of mortgages, what those ought to be. And hey, we know the price of equities. We think those should be higher. And hey, they've just gone on and on and on. And now they're down to the point where they are literally day trading the market. When the market's down 0.5%, you only have to wait an hour for some federal official, FOMC committee chair to get trotted out and make a statement. And since December, remember we had a little equity volatility in December, which meant prices, oh my God, went backwards for a second. We've had 500 billion new central bank dollars thrown into the markets as a response to that. So it's not just the Federal Reserve. I'm using them as a placeholder. It's the ECB. It's the People's Bank of China, Bank of Japan, European. I mean, it's all of them, right? But they've got themselves locked into this conceit that they are responsible for and know what the right prices are in every market at all time. And of course, they're always higher. Now let's get back. Higher and higher. Stocks and bonds are also just claims on real stuff. Here's a math problem. How can stocks grow at 10% a year in real terms when the economy is growing at 3%? Aren't these a claim on this? But that's the marketing arm, and that's what we've gotten locked into, is this idea that we can always have more and more claims, when over here in the real world, we find out that real stuff isn't growing at the same rate, and it can't, right? There's no more tuna in the ocean. The Ogallala Aquifer is already drawn down, and it's responsible for 1/6 of the world's grain output, and it's an aquifer in the western U.S. that recharges with a 10,000-year cycle, and we're drawing it down 6% a year. You can't, I don't care how much money you print, you're not going to get more water out to grow more wheat and export to the world. It's just, we're running into these limits all over the place. And, in the gold business, every major gold CEO pretty much has come out and said, well, it's getting harder to find this stuff. We might be at peak gold, where we used to get 10 grams per ton, we're down to 1 gram a ton, or whatever the story is. The depletion and diminution of any asset class you want to look at in terms of real resources, it's just getting harder to get this stuff out of the ground. So people are saying, oh, well, we'll get it out of asteroids, or we'll mine 10,000 feet under the sea. I mean, it's just, we're getting to that crazy part of the story, which is we might also just say, hey, we're not going to grow like that. What are the implications of that? What does it mean when we have a financial system that has to constantly grow that can't anymore? And that's where it's hard to figure out, where that puck is going to be, or sets of pucks. There's a lot of pucks in this story to continue the metaphor. So that's what I would encourage your listeners to really start focusing on, is this set of changes is literally going from everything everybody knows about finance and economics built over the last 100 years is now up for grabs. And it's rooted in this one idea. We can't keep increasing the claims at a faster pace than the actual economy is growing. What actually governs this? Resources, energy, raw resources are the limiting factors in terms of how fast that can grow.
So I would agree. In some respects, it's a game of musical chairs with investments, right? Because people who are buying, we'll call fixed income right now, and they're, they think it's a great investment. But a lot of times that's fixed income issued by a corporation that's mired in debt that probably may not survive the transition. So, you want to be holding and owning real assets, as you said, real estate, precious metals, energy, in one of its forms. So we kind of focus a lot on precious metals. And I think you may agree that one advantage to precious metals, it's something that the quote unquote individual retail investor really can own much more easily than some of the other assets that will still do well in the future. They're divisible, they're portable, they have a lot of attributes that are ideal for investing. Now, of course, most people talk about gold and a little bit about silver. Can you just expand a little bit on your feelings toward the 4 primary, gold, silver, platinum, palladium? Do you see them as all being valuable and a good store of wealth going in the future? So just give us your overview of the 4 majors.
Sure, I would love to. So, often I have to start by separating the words gold and silver. A lot of times people use it like it's one word, gold and silver, and let me separate them. So I own about 2/3 of my precious metals value in dollars is held in gold. And the reason for that is I believe that this imbalance we've been talking about is primarily a defect in the monetary system. It's rooted in human behavior. But listen, we're going to overprint again. So what we're going to do, we're going to have a financial/monetary accident at some point in the future. And gold, to me, represents the only monetary asset in the entire universe of them that's not simultaneously somebody else's liability. With a caveat, that means I hold the physical gold, right? I'm not talking, shares in a GLD trust or something with a 200-page prospectus and a lot of outs. You're holding the physical gold in your hot little hands in some way, shape, or form, or it's a fully allocated account, whatever. You've got defined ownership. I'm convinced there's a monetary accident coming, and that's why I hold this. Silver is a different bet for me. It's, the most conductive and the most reflective element on the entire periodic table. Yeah, I believe that we're going to have a reset, but there's an industrial future that continues after a big sort of a correction. I love silver. It's my Rip Van Winkle thing. I don't give investment advice because you can't do that. But from an educational standpoint, if somebody said, Chris, what would you personally hold, knowing that you had to wake up in 20 years, silver would be it. This is the thing I would wake up in 20 years and be absolutely positive it has a value and probably a much higher value for a number of reasons. One, the depletion. If you just look at, world silver mine output and you look at the average ore grade, again, you have this story that's very common, which says we're working harder and harder to get less and less out, right? That's just part of the story. Connected to that is this idea that to get any precious metal out of an ore form into a refined form requires energy, lots of energy. If you wandered with me over for a second to the oil story, I know there's a lot of shale hoopla right now, but trust me, in a number of years, we're going to be singing a different song, which is, whoops, oil's, very much more expensive and is a little bit rarer than we thought. And so I think, oil's just going to get more expensive over time. That bleeds into everything, grains, metals, all of that. So I love silver as an industrial metal because there are more and more uses all the time. I have this whole story that I'm sure your listeners are familiar with about where and how we're using silver. And more importantly, there's actually more gold above ground in identifiable form now than silver because we lose silver. I don't think we should, but we are. Every cell phone that doesn't get recycled, we lose, however many milligrams of silver in that process. So it's just being sort of lost. And I can't believe the price of it right now. When I talk to silver miners and ask what their all-in cost of production to get pure silver out of the ground, it's above $15 for a lot of them. And that's the price where we're at and we're recording this. So I love silver. The other ones, platinum and palladium, obviously we're going to, more and more concerned around air quality and using those in catalytic converters and things like that. Less of a jewelry story, but palladium's interesting to me as a supply-demand imbalance right now today, looking at this. And plus there's lots of interesting uses for palladium that are sneaking in at the edges of consciousness right now. Some really outrageous things possible in the energy space. A lot of firms are reporting interesting uses of both nickel and palladium in something called low energy nuclear reactions. I'm not totally certain of what's happening there yet, but there's enough that I have one eye sort of open watching that space. So I think there's going to be some surprising new uses that are going to come out of that space. And again, we're going to find that the platinum group metals, really rare, really hard to get out of the ground. They don't have that many places that you can get them from. And I would extend that into other really rare metals, gallium, indium, which I know we're off of the big four that you asked me about. But if you believe in an industrial future and you look at the resource base that we've got for some of these metals out there, the demand is going to vastly outstrip supply unless something really big changes in the story. And the only moving lever we've got is price. That's the only thing.
And when you just said a term, if you believe in an industrial future, you talked about the population will be substantially larger in the future. And it will be. I don't believe how anyone could believe we could have a non-industrial future, right? Industrial production allows for the sustainability, right? And expanding that production, becoming more efficient in that production. So I think it's anyone who feels that we're going to go into this, agrarian, back in time economy is off base. So I think these metals that you're talking about, because to sustain this new economy with more people, but also get a hold of pollution and other things that are destroying, water and air, these metals are probably going to be playing more and more of a role. And the other dynamic, and you talked about it, you said about the rarity, platinum and palladium, much more rare than gold and silver. And not only are they rare, but where they're found and mined is very limited. I mean, gold and silver, much more all around the world, right? China, Russia, South Africa, the Americas, Central and South America. And with platinum and palladium, you're talking about predominantly, in 80%, pretty big market share, Russia and South Africa. And when you have an essential metal, and we've made that case in many forums where we've been asked to speak on about those metals, that's a big driver for making it, sustaining the price. So, this has been an excellent overview, and really that's all you're able to provide. I mean, you have a great depth of knowledge on this. So I'd encourage our listeners that to learn more about what Chris has to say and to get his deeper insight on these topics, I'd visit peakprosperity.com, take a look at his video series, and I'm going to ask him to come on again in the near future, because as everything is unfolding in this great reset, Chris is a great contributor to help us understand what's happening and what to expect just down the road. So, Chris, anything you want to wrap up with as we close?
Well, listen, the most important thing anybody can do today is to gain the understanding, gain the knowledge. I know it's a lot of material and it looks very complex, but hey, that's the world you live in. So first thing is gain the understanding, but do that only up to the point where it leads you to taking action, because understanding without action, just spinning our wheels. So I think this is a time for people to be motivated to take action. There's some really extraordinary things coming, but you got to skate to where the puck's going to be. So to do that, you really have to invest in your knowledge and really build up what you know. And I've done my best in this thing called the Crash Course, which you can find online or at peakprosperity.com, which is a video series broken into a lot of little chapters. It goes through understanding the monetary system and how it actually functions, connecting it to energy and also to the environment. If you get that, it gives you sort of a framework to understand why these changes are happening. And by the way, if you listen to the media, you'll be misinformed or just overtly lied to about everything. It's just, tune that out, get your information from places that make more sense to you and that pass your own internal truth meter, and go from there.
And now I just have to recap. You're exactly right. You got to do your own research, take it from a lot of sources, distill it down. You got to learn how to read or understand when you're being lied to and misled, which is predominantly the role of the mainstream financial media and regular media. And then the big differentiator are those who can just intellectually understand what to do and then pull the trigger and do something. And unfortunately, pulling the trigger becomes very difficult, especially when the drumbeat from the media all around you is telling you not to do that, where that's not the path to take. And that ends up being the big separator between the winners, right, in the world of investing, and the masses who constantly are being led down the wrong path. So again, thanks a lot for coming on the show. Look forward to having you on again soon. Again, everyone, peakprosperity.com, a wealth of information, really smart guy. Chris Martenson, talk to you soon.
All right. Thanks, Chris.